As a trader, if you've ever felt lost if you should go long or short on a trade, it's because you don't understand which way the market is trending. In this video, I'm going to teach you a simple way to identify the trend and daily bias before the market even opens, so you can have a clear and repeatable entry model for high quality, profitable trades every single time. So how can we find the daily bias and trend before the market opens? Now, if you've been following this channel, you know last month I made $220,000, and the number one question I got was how I was able to identify which stock to focus on that had the most relative strength or weakness during the day. And in this video, I'm going to teach you how to find the daily bias and trend before the market opens, so you won't have to have 5 or 10 different stocks on your screen. Rather, you can focus on one stock that has the highest probability for you to enter the trade and make profits. Now, the way I'm able to identify which stock to focus on before the market opens, or how I'm able to make a thesis, is using the top-down trading approach. Now, this approach is very effective, and in this video, I'm going to teach you exactly what I do every single day before the market opens to narrow down the stocks that I'm going to be looking at right into open. So when we're looking at the top-down trading strategy, you want to think about it like modules. So here we have the first module, and then for this purple right here, I would consider this module. And finally, for these blue/green boxes, I would consider this module. So the way I look at it for myself for the top-down approach is there's 3 steps. The first step is to identify the higher time frame thesis. What is going on the stock on the higher time frame? Now, when I say the higher time frame, this includes the daily chart, the 4-hour chart, or the 1-hour chart. These are the 3 higher time frames that I personally look at when I'm creating a thesis on which stock I want to focus on in the day. And one thing I want you to notice is I said the word thesis. I am creating a thesis on what could potentially happen in the day. There is no certainty that that will 100% happen, and you have to understand everything we do with trading is probabilities. However, using the top-down approach, this should increase your win rate, meaning it will increase the probability of the trade working in your favor. Now, after I've identified the higher time frame thesis, the second step is going to the lower time frame and getting the proper key levels that I would enter the trade off of. If you cannot identify the proper key levels on the chart, it doesn't matter if you have the proper higher time frame thesis, you will not be able to enter the trade the best risk to reward, and therefore this will decrease your profits. So you must be able to identify the best key levels, but at the same time, you want to keep these levels repeatable. And in this video, I'm also going to teach you exactly how to draw those key levels. And then finally, for step 3, all we have to do is enter the trade using a profitable entry model. Now, I have so many videos on this channel talking about my exact profitable entry model that I use every single time with multiple different setups that I trade as well. So after this video, you can go and watch an in-depth video of my exact profitable entry model. But with this being said, how do we create a higher time frame thesis? Well, the first thing you need to understand is we're always looking for continuation on the stock. This means that you have to wait for a clear trend, and you do not trade range or choppy price action. I've seen too many traders have profitable days or even weeks, but then it only takes one day for them to lose all of those profits because they end up trading this range action. Now, for myself personally, I trade the uptrend and I trade the downtrend. The one thing I avoid is sideways action. Sideways action simply means that there is equal highs and equal lows. This is the range, and for myself, because I'm a momentum trader, this is going to be where the most chop is. The trade might go a little bit above your equal highs, and you may enter a long position thinking that the trade is going to move to the upside, and then it'll just come back down in the range. And then when it breaks below this previous support, you may enter a short position thinking that it now had fake out liquidity up here, but then the trade will just come right back into the range. And because of this and my historical performance, I personally avoid the sideways action. What I look for is an uptrend, which simply means there is a high, there is a lower high from the previous low down here, and then the trade is simply moving up with new highs and new lower highs as well. Vice versa, I also trade the downtrend, which means lower lows and lower highs. As we can see, this stock is moving to the downside, and these are the 2 conditions that I would want to trade. On the higher time frame, you need that clear trend if that's the stock you're trading. When you have sideways action or consolidation on the higher time frame, you have a much more lower probability of any trade working out. Now for step 2, we need to draw our key levels. One of the biggest questions I get in the comments is, what key levels do I draw and how can you draw the same key levels? Well, for me, it's very important that whatever I do within my trading system, I keep it simple so it's repeatable. And this is why it works so effectively. Therefore, if I was a new trader, I would not want 100 different key levels on the chart where I didn't even understand why they were there. So for myself, I like to limit my key levels, but also make them repeatable. I do this by having a simple formula. On the lower time frame, I will mark out the pre-market high and the pre-market low. I will mark out the previous day high and the previous day low. And finally, I will mark out the 5-minute high and the 5-minute low of the day that we are actually trading. So in this example here, we can see that this is the previous day high. We can see that this is the previous day low. We can see here we have the pre-market high level, and the previous day low level actually coincides with the pre-market low level. Therefore, I didn't draw two because they were too close. And finally, you can see here the 5-minute high and the 5-minute low. Now, within this example, you can see that I only have 5 key levels. And if I was to draw out the pre-market low as well, it would only be 6 key levels. This is very important to understand because every single level on my chart holds significant value. I've seen too many traders' charts look like this, where they have too many key levels and they don't even understand what they mean. So making sure you're organized before the market opens is going to be crucial if you want to enter high quality trades and be done the day within the first 2 hours, exactly how I do it. And finally, when we're looking to execute the trade, this depends on how you trade specifically. You need to ask yourself, what do you trade? Do you trade stocks, options, futures, forex, crypto? For myself, you guys know that I trade options and futures. You need to ask yourself, what's your strategy? Once again, on this channel, we have multiple different setups that you can trade. You can trade the 5-minute retest, the pre-market retest, previous day high and low retest. There's a lot of different setups for you to choose from, but when you're new, you want to stick to one setup at a time. And finally, you want to identify which time frame you want to trade on. Do you want to trade on the 10-minute, the 5-minute, the 1-minute? If you've been watching my channel, you know I only trade till 11 a.m. Eastern, and therefore I trade and execute my trades on the 1-minute time frame. Now, if we look at the example from earlier, we can see that we had all these key levels marked out, and what happened? We swept the 5-minute low. We came back for the previous day low / the pre-market low. Therefore, there was a little bit more confluence as there was 2 key levels sitting there. And on top of that, we got weak price action. Because of that weak price action, if we entered into this trade here with our stop loss simply a little bit above this previous day low or at the top of the candle that we entered in on, we could have easily rode this bearish trade to the downside, and this was a very simple trade to enter on, and we would have been done the day in less than an hour. Now, with this being said, if you're still a little bit confused, do not worry. Let's go look at some real examples on how to find daily bias before the market opens to really solidify these concepts. Okay, so on the first example here, we're on SPY or SPY, and in this example, the first thing you want to do when you're using the top-down analysis is go to the daily time frame. On the daily time frame, we want to see exactly what's going on. In this example on SPY, we can see we have a swing low down here, and then we have a swing high up here. So this means that overall, this stock is moving to the upside. Now, on top of this, we can also see these higher lows being placed. So you see the first higher low right here. The next higher low would be right here. We then create this third higher low, and then finally we create this final higher low. The same thing is being said with the upside as well. We see this high, and then we see this high again, and now we just created a brand new high up here. So overall, on the daily time frame, this stock is in an uptrend, and all you have to do, because we want to keep it simple, is make sure you understand what the daily time frame is telling you. Now that we understand that the daily time frame is bullish, we also want to mark out the daily high and the daily low. So this is going to be the previous day high and previous day low levels. Once we mark this out, we now go over to the 4-hour or the 1-hour time frame. In this example here, we're on the 1-hour time frame, and what do we see on the 1-hour time frame? Well, on the 1-hour time frame, we see that this stock actually has a flat top. If we just extend this over, this is a flat top, and at the same time, what I want you to notice is we have a higher low right here, and then we just created another higher low at this previous day low level. What this shows me is if this stock breaks above this previous day high level, this will have a lot of momentum to the upside. The reason this is because on the daily time frame, we already know we're at all-time highs. So now all we're doing doing is looking for continuation in the trend. Now, once we have that thesis from the higher time frame, which we know we should expect bullish action, therefore we should be looking to go long on this position, the next thing we want to do is go down in time frames and look for those lower time frame levels. Now, in this example here, once we move on to the lower time frames, what do we want to mark out? Well, we already marked out the previous day high and the previous day low. The next levels that we would want to mark out is going to be the pre-market high and the pre-market low, which is right down here. And finally, we're going to mark out the 5-minute high and the 5-minute low. Now, I want to make sure this is very clear that we do want to look for that upside potential on this trade. Therefore, this trade could potentially come down to this previous low and then move to the upside as well. But to keep it simple and for this video, what we'll do is we'll always wait for the first 5 minutes to play out and then look for a trade. So let's play out the first 5 minutes here and see exactly what happens. All right, so we just got the first 5-minute candles, 1, 2, 3, 4, 5. And what we're going to do here is mark out the 5-minute high. Now the 5-minute low is also coinciding with this pre-market low. Therefore, it's too close for us to be marking those levels. Like I said, we want our levels to have emphasis and a significant meaning. Therefore, drawing a level very close to another level doesn't have as much significant meaning because we know that the levels are going to be treated as small zones. Now, what I would be looking for on this specific trade, because we know we want to go long on this trade, is simply a breakout, a retest of this 5-minute, and then a move all the way back up to this pre-market high / this previous day high as well. So let's play out the trade and see exactly what happens. So right here, what happened? We got the breakout, strong displacement, and then the retest. Now notice, this is the 5-minute range retest setup, and this is the setup that I teach on this channel as well. However, we now have added confluence of not only the higher time frame, but this lower time frame confirmation with price action. Therefore, what we can do here is enter the trade looking for a move all the way back up to this previous day high or this all-time highs, and our stop loss in this scenario here simply has to be a little bit below this previous candle, which is a 3.43 risk to reward trade. This means for every $100 of risk, we would be making $343. So let's enter into a buy position here and see exactly what happens. We came back into our entry level. This was a bearish candle. However, we did not break market structure, and therefore we would still be in this trade. As we can see here, just like that, we actually just hit our profit target, and we actually got continuation from our profit target as well, because we knew that this was an all-time highs level and we were looking for continuation in the trend. Now, this trade resulted in a $550 gain by simply understanding the higher time frame trend and coming into the day with a thesis. Now, with this being said, let's look at another example to solidify this concept. All right, so here's another example that we have on Apple. On Apple, we're once again on the daily time frame first, and the first trade that I showed you on SPY was a lot more simple because on the higher time frame we were trending to the upside, and we were trending to the upside for a very long time. However, on Apple here, we can see that we actually have this high up here, and then we have this low down here, but in between we can see so far it's a little bit more sideways action. Now, to a brand new trader, this may look difficult to trade, but I want to break this down in a way that you'll be able to understand exactly how to see when market structure shifts so you can have the best thesis going into the day. Now, the first thing you want to notice is we have a high up here, we then have a lower high, and then we finally have the third lower high right here. We also have a low right here, a lower low, and then finally the lower low down here. In this scenario so far, this stock structure is telling us that the move is to the downside. However, we actually end up breaking this previous lower high, and as we can see right here, we make a move to the upside on this candle right here. We have a body candle closure above, and this shows that there is strength coming into this name. Now, this doesn't confirm that we have broken the market structure or we should be looking for a long position right away, because this would still be a little bit too early of an entry. What we really want to wait for is that trend structure to break. Now, in this example here, we can see that Apple had this lower high up here as well, and we actually ended up closing above this lower high as well. Now, what does this prove to me? This proves to me that not only did we break this structure down here, but now we're breaking it up here as well, and we have now broken two lower highs to create a higher high here and also a higher high up here. Therefore, for me, it's very clear that I would be looking for a move to the upside on Apple on the daily time frame. So now that we have that thesis created on the daily time frame, what we must do now is draw out our levels. Now, in terms of levels, like I said, you're going to mark out the previous day high and the previous day low. And now we're going to hop on over to either the 4-hour or the 1-hour time frame. In this example here, we're actually on the 1-hour time frame. And as we can see on the 1-hour time frame, what is this? So even on the 1-hour time frame, we can see that the stock is making these clear higher lows, and we can see that it is holding structure so far. We had this high right here, we came back for the retest, and we're still holding structure, but at the same time, we are now creating a flat top on Apple, which shows that if Apple breaks above this previous day high, we should have continuation into the day to actually look for a potential long position on this name, and this trade should give us a higher percentage return. Now, both on the 1-hour time frame and on the daily time frame, we have confirmed that the thesis is indeed to the upside. So now what we'll do is go to the lower time frames and mark out our key levels. Okay, so here we are on the lower time frames. As you can see, we have the previous day high and the previous day low. Now what we're going to mark out is going to be this pre-market low level right down here, and the pre-market high level is very close to, once again, that previous day high level as well. So in my own personal trading, I probably wouldn't mark this level down, but just for this video and the simplicity, I'm going to mark down this level just so you'll be able to see it. Now, with this being said, what we have to do now is wait for the first 5 minutes to open to see how the stock actually opens up. We're going to mark out the 5-minute high and low, and those are going to be all the levels that we need for the day. So as we can see here, here's the 5-minute high, and then right down here, we have the 5-minute low. In this example, however, Apple came down to the pre-market low and held this level extremely well. Now, like I said, you can look to enter before the 5-minute range sets up. This is a good potential entry right off that pre-market low level, looking for that move to the upside, because our thesis was very clear into the day. However, if you want to be a little bit more conservative, you can wait for the 5-minute range retest as well. But if you want to be aggressive, you can also enter down here. And this is a trade that you could have easily potentially taken. However, for us, because we were waiting for the 5-minute range, we will wait for the 5-minute range to break out, retest, and then look for a move to the upside. So let's see exactly what happens. Okay, so for this example here, we can see that we actually had an immediate retest on Apple right at that 5-minute range retest. You know that I like a little bit more displacement on that move. We never broke above that previous day high, and we came right back down. Now, when we came down, we had a very strong price action candle here, and therefore I would be interested in a long position on this move. My stop loss in this scenario here would simply be the body candle of this previous candle that broke the 5-minute high, and my profit target here would be this previous day high, and this gives us exactly a 2R multiple, meaning I would be risking $100 on this trade to make at least $200 on this trade. Let's enter into a buy position here and see exactly what happens on this trade. And just like that, we can see that Apple had a really nice move to our profit target. We also got the retest of this previous pre-market high level as well. And this was a $520 trade, and we are done the day at 10:01, meaning it took us 31 minutes to make this $520 by simply understanding daily bias and the trend before the market opens to enter high probability trades. So I hope you got value from this video. If you did, make sure to leave it a like. If you have any questions, put them in the comments down below. Make sure to follow me on Instagram and Twitter for more education, and I will see you guys next week with a brand new video.